Hello and welcome to Banking Frontiers Live to our wonderful story of the corner office. And with me today is Mr. Lau Chaturvedi, a very lovely person, as his name says. And of course, he is the CEO of Reliance Securities. So, Lau, welcome to Banking Frontiers Live series on the corner office.
Thank you, Babu. Thanks for giving me this opportunity and thanks for introduction. Thanks a lot.
Great. So let's discuss about those interesting times today, especially for the markets where you are in, where there has been really a lot of windfall gains in the industry, and these are the historical moments, especially. How do you view the overall scenario, taking it from here? Wherever we see the markets going up, we are always holding our hearts and waiting for that fall to come. So, what is your advice during these
Yeah, no, you're right, Babu. I think the markets have been going great guns lately, especially post the COVID-related crash that we saw back in March, April. After that, the market has not looked back at all. So there are two aspects to this journey. The one aspect is when we look at the conventional way of looking into the PE multiples, 1 year forward PE multiples, which has been the historical average has been around 18, 17, 18. And I think today we are with 1 year's forward average of 22, 23. So it's around 30% premium where the market is currently at based upon the historical prices that it has been all along. Now, obviously, that says that there, quite a bit of run-up has happened. Structurally, I can still tell you that we are still a nascent stage of the capital market. The India is going to be the $5 trillion economy and more in times to come. It is not if, it is about when. It could be few years here and there, but the 5 trillion and the more is sure shot. We are already fifth or sixth largest, and we are going to continue great guns on that. Also, if you see, even if you say US 55%, UK 30%, you keep hearing various penetration level of retail. India is still with all the demat accounts and all that euphoria over last 20 months, 24 months, is still at only 4 to 5%. So we are still way far from the our competitive landscape with regard to the penetration, with regard to the fundraising, and with regard to providing risk capital to the India's economy. Only one challenge that I see is that whoever has entered the market post COVID has not seen the correction or that kind of cycle yet. So we just have to ensure that we are there, engaged with our customers, our investors, and not portray this as only like a money-making Las Vegas machine. It is about being disciplined, investment, trading, and ensuring that there is a proper wealth and proper investment portfolio that is getting built along the way. So that's how I see.
Fantastic. Now, see, one very interesting market which I have been seeing from some fintechs that are coming in the near future is also trying to get into the bottom of the pyramid to get into the stock markets, especially the blue collar workers, the housemates, and a couple of very interesting people. I have seen them posting this, how to put them into the stock market or help them to make a better return than that of a bank deposit using the markets and mutual funds. Do you see that is also a good market and there is growth in that sector?
Yeah, that is actually one of the most strongest segment as I see it. The only thing you have to ensure that there is the accessibility of all the financial products to that market. There is a clear understanding and there is a clear return proposition and the entry and exit proposition, which is very easy. But I think it will take an effort to crystallize that into a reality, because it is going to come from an awareness and ongoing engagement at a very systematic basis, and providing the access of all products in the most simplified manner to these set of investors. And that's a journey that we are going to embark upon.
The right kind of education.
It's the right trend. Yeah, that's correct.
And I have also heard about your famous KISS theory. So
Yes.
let me just know the relationship between love and
the
KISS. Story of yours.
Yeah. So it just, KISS is a different theory. It happens to be by me, whose name is Love, but KISS is just keep it simple and stupid. See, in our market, there are three most important things that are required to be done to make India a strong financial savings and a strong financial market at the retail penetration. One is the ease of onboarding. Second is the accessibility of products to all, and third is investors' trust. There is still 1.4 billion people who, if they have access to a small ticket, we can really make it big. For that, the KISS kind of suits the construct, because retail goes with the simplicity. And if we keep it simple, if we keep it stupid in a way that it's a very you invest, you make money, you exit, and there is a clear log and clear trail which is there, so that investor can trust. I think the KISS done in a very sustainable fashion will lead to a brand becoming less and less relevant. And that is what is happening today with all this fintech and the other companies who are now propelling. And the brand is not no longer a prerequisite for a financial services. If you see for last 5-7 years with the new age companies like Upstock and Grow and Zero, there's a lot of companies which are coming, and there is a lot more. There are a lot of companies that have already grown into millions and millions, and we hear first time, right? That is what is happening. So the KISS is something which is going to shake up the brand presence, and with less and less of a brand requirement for this space. I believe this is healthy. This is going to ensure that it is not just winners take all. It is more scattered, and it is not just top 3-4 brands. It's actually whoever is there to provide better platform, better services, better products, better engagement, and transparent, so that because it's digital, end to end is transparent. I think that is where the future growth and the opportunity would lie. And hence I believe that instead of brand, it is a KISS that is going to take it forward in future, especially for our retail penetration.
Businesses are today built upon technology, and the securities business, of course, has seen a ocean of change with the algorithmic trading coming in, or be it with AI and ML kind of stuff happening, and process automations happening. So what are those kind of technologies which you personally feel would redefine the future for security training on one side? And of course, you spoke about all the upstocks and Zerodhas and the fintechs coming into the play. Many of them may be competitors, but there can also be complementing businesses. So how do you blend both these together? So there are two questions. One is from what are the promising technologies? And second is what is the blend with fintechs that you can see?
Yeah. So, Babu, the key here is that technology, there are two kinds of disruption which is happening. One where technology is a cause, and another one where technology is the effect. And I'll explain that. So India was the large physical market up until the COVID came and the digital disruption happened. And we as a human being, when pushed to corner, we tend to deliver. And this is again where the technology has brought a lot of disruption. It has propelled a lot of businesses 5-10 years ahead of what it would have been in the normal cycle. From the technology perspective, the physical has been disruptive, is being disruptive, and will continue to be disruptive. Today we are doing a technology which is more based upon the centralized contour, the client server contour, more which is hub and spoke contour. That's what usual is what the technology disruption is. The future of the technology disruption will happen within the construct of technology, which is blockchain, decentralized finance, which is these kind of areas, the tokenization, as we are seeing already. I'm not saying Bitcoin or some alternate currency. I'm just saying alternate asset class. And as an alternate asset class and underlying blockchain technology, the DeFi technologies, I think technologies themselves will be disrupted. And with the technology themselves, the disruptive technologies coming, which will disrupt the today's technology, it is a disruption of a different magnitude when the business models are getting disrupted by technologies and technologies are getting disrupted by underlying construct, which is completely different from what we are. And the answer is no. That leads to the collaboration. And collaboration is where you would see where there will be a one partner who would focus understanding the customer base. There will be another partner who will provide all the logistics and the entire end-to-end customer journey and keep it simple. And there will be a third partner who will probably ensure that the underlying disruptor is not disrupting the end business itself. So this all collaboration will mean that these fintech companies of today, the fintech of tomorrow, and the digital of all, or the physical of today and tomorrow, somewhere either is banking, either is broking, either is insurance, in any other non-banking, that there will lots of consolidation and collaboration is going to happen for this new model to come in. One thing I can assure you that in next 3 to 5 years, there will be no organization in silos who will continue to survive or thrive. It has to be the collaborative effort, the way the disruption is happening and the way now the millennials are expecting with the quick snap, who have not seen the downside in the market at least for 24 months. I think the collaboration, the consolidation, and the continue to be that provide that last mile connectivity to the end customers and investors is something that will be the future. How in what form and fashion is something we'll see how it impacts each of the industry.
What promise does the global market hold, and what promise does the digital asset hold today to create a balancing act?
Yeah. So there is a concept of correlation and there is a concept of diversification, right? The lesser is a correlation, the better is a diversification. As I mentioned earlier, that from the pure only equity and capital market, we have to move to an overall financial market where there is an accessibility of currency market, the fixed income products, the currency product, the commodities product, and the alternate products is we have to provide that accessibility and simplicity to our retail. Taking the same context and extrapolating it to the global market is also an asset class that provides a good diversification to any investor. It provides a good opportunity to participate, and with today's market, which are so interlinked with regard to the fund flow, with regard to the companies who are overseas and India as well, I think this is a perfect platform that must be provided at the retail level, where there will be a enabler that it should be enabled to be provided to all the retail to participate in the global markets, be it the global equity or be it any other global asset class, in a very simple, in a very transparent, and in a fashion which is also a low ticket size. If it's a low ticket size, it will help the penetration better. So far, the global market is only in the purview of the large wealthy clients. I think that has to change, and it is one of the very strong asset class that provide the risk diversification. But logistically and operationally, we have to ensure that the entry and exit is very seamless for the retail, for them to participate, and there is enough engagement on an ongoing basis, because this is not something that you just sell and leave. This is something that you have to continuously engage with your customers and investors so that they understand it's an ongoing basis, so it becomes like a second nature for them to invest.
What kind of transformation do you think is required for the workforce of the future now? What do the people have to get ready for moving from here, the kind of industry we are in?
I think, see, as you rightly said, people is the only asset that is most relevant from the service industry, especially the financial services. It's a people. And according to me, the people, there are two key levers that we have to ensure that when we take care of the people, when we have an organization, when we build organization, there are two things that we obviously want to ensure. One is that people, when people are taken care of at the most adverse time, that sticks the most, right? That's why I believe that the adversity creates an opportunity, because if market is 18,000, everything is up, there will be a lot of demand about the people. Every individual has some stake in the company in some form and fashion. The growth or the journey has to be inclusive. So as long as you take care of two things, as long as the organization is there at the time of adversity, and as long as the journey is inclusive, doesn't matter, the ups and downs are the time. Ups and downs is a very natural thing to happen. It is every individual, every company goes through that. But if these two things, which demonstrate the right intent of the organization, is the only sustainable way to build a people-centric organization.
As a CEO, what is your wish list? As an industry CEO, what should happen on one side, and what would you advise to the aspiring leaders who would look at you?
So first, have an aspiration, think big, right? And second, have the rigor, and there is no shortcut to any success. And have the focus. The adversities are the most opportunities provider. So take that. And the most important thing, have a right intent and take people along. Make it inclusive. If you make it inclusive, there's a better chance that it will happen. So if you have to run alone, you can go fast. But if you have to go far, then you take people along. Just be happy.
What about any wish list that you may have?
See, I have one wish list that I have, is that I know it's a very it may take some time, but I want the India to have zero poverty. The per capita of India should be #1 in the world, which I believe that if you go back 500 years, 600 years ago, it was the case. It's not that India has never been there. It's just that we have never been there for quite amount of time, but it was there before. And the most important thing is, people should stay healthy, and there should be everything which we do, everything, whether it's a wealth creation, whether it's a financial savings, whether it's any other savings, whether it's a job creation, make it inclusive. If we work on the inclusiveness, that with that comes a sustainability. That's all I have. And my wish list is that someday we will reach where all this 5%, 2%, 3% will be 80, 90%, and we will have an India who will be #1 on the happiness index in the world. That is the most important thing.
Yes, that is more important, because wealth is alone not the happiness.
That's correct.
Can be in the happiness index of the world.
It's overall. That's correct.
Thanks.
Thank you so much. Thanks, Babu, for giving this opportunity. You please stay safe, stay healthy, keep smiling, and we'll be in touch. Thank you so much.
Thank you very much now.
Take care. Bye-bye.
Thanks.